Good afternoon. You're watching Closing Trades on ET now, and the closing trades have turned a bit for the worse because in the last 10-15 minutes we have seen a bit of a slide when it comes to the Indian markets. The Nifty is almost 75 points off the highest point of the trading session, and the bulk of that decline is also on account of what's happening with Bank Nifty because that's down almost 250 points from the highest point of the trading session. Having said that, we have been trading in a narrow range throughout the day, so of course we are watching out for how that transpires. Despite the slide that we have seen in the last 15-20 minutes, it's the energy and the oil and gas space which is doing okay. Case in point being a BPCL, which is your top gainer at the index level. Chennai Petro is up a good 12%. MRPL too is sitting with gains of almost 12%. Insurance stocks are also buzzing since the start of the trading session, and these are not big moves, but given the fact that insurance stocks hardly move these days, all of these names are at least moving in unison today. So just wanted to highlight that. There is also a big gain coming in for Thermax, almost an 8 to 9% gain coming in on heavy volumes, and Ircon too is moving on good amount of volumes, and Karur Vysya Bank, the result reaction continues from yesterday. That stock continues to build on to gains. Tire stocks, it's a rub-off impact that we have seen of CIAT, which was higher by around 9 to 10% at the start of the day. Yes, it's cooled off, and it too can be said for the other counters as well. But nonetheless, there's a bit of a green on the screen on account of that. Having said that, Aisha, it looks like the result candidates, the likes of IndusInd Bank, which will come out with its earnings tomorrow, are taking it a bit on the chin right now because that's seen a slide. And then, of course, some of the auto names as well as L&T are the ones which are leading the drag as of now.
Yes, Tata Motors, L&T, IndusInd Bank, like you rightly pointed out. There's, of course, TCS as well, which is down a little bit. And some of the auto names are the ones which are also cooling off. So I can say the same about Maruti, M&M, turning the tide for some of the blue chips like a Reliance and SBI also, which have now completely turned flat. So that's pretty much the names which are seeing a fall, and that's clearly sort of rubbing off on the index as well. Though it continues to be a good day for an LTIM, for a DRL. Bajaj Finance ahead of its numbers is standing strong, still holding up around that 1% gain mark. Bajaj Auto, BPCL are some of the names which are looking up in trade. But talk about some of the other earnings candidates as well. Tata Metaliks came out with its numbers. While they've seen a fair amount of margin expansion, the revenues have seen a downtick of about 14%. There's Newgen Software as well. A significant amount of margin expansion on a quarterly basis. It's jumped to now 19.5%. That is the other stock which is in focus. ICICI Securities, blowout set of numbers, as has been the trend with the rest of the peer group as well. PAT uptick of 42%, revenue higher by 46% on a year-on-year basis. And then CIAT, of course, like Anisha flagged off, that has seen a fair amount of margin expansion. There's Trident also, that's sour in sentiment for sure after the reports coming in that there are IT raids which are currently underway countrywide across their offices. Of course, HDFC Bank brokerage is reacting to the numbers. Morgan Stanley expects NII growth to re-accelerate, although there is a price target cut coming in from the house of HSBC. Incred believes that the worst is now behind them. Jefferies is saying margins will improve Q4 onwards. That stock is still sticking by with a large part of its gains, still holding higher by about 0.6%. But the index is not, so let's quickly bring on board our experts. We've got Kunal Vora on the fundamentals, Kunal Naresh on the technicals. Kunal, anything to worry?
I think as such, I believe it could be just about, again, a consolidation for the indices. Till the time we don't break below the major support on the index, the view and the bias would still remain on the bullish side. The only disappointing fact for the markets today is the lack of participation from the likes of HDFC Bank. I think less than a 0.5% move for HDFC Bank post results. I think it's something of a disappointment. Yes, there are many other large cap names like Tata Motors, L&T, etc., which are also ebbing off today. But I think whether it's a short-term correction or whether it's a major downtrend into these names, that we'll come to know maybe in the next couple of days. So as of now, the view on the index remains to be on the slight neutral side. If we close above 16,800 mark, that's where I would believe that the view would start to become a lot more bullish.
Okay, so that's the take coming in at the index level and some of the large heavyweights as well. But Naresh, your take as far as some of these oil and gas names are concerned, Chennai Petro, MRPL, Oil India, all of these are seeing quite a bit of spike. Which is your favorite?
So a lot of these names are breaking out. The whole sector is breaking out. Oil India looks the most interesting one. I've been recommending it for some time now. The stock has given a breakout above the highs made in last June. That is the time where crude reached that 130 mark, and post that the stock corrected and remained sideways, and now we are breaking out of all those 300, 315 marks. So this could ideally be a slow and steady candidate towards 370 to 400. So Oil India looks interesting. MRPL as well as Chennai Petro have already moved up quite a bit for the day, but on dips they still look interesting. The trend is pretty strong across the board in this pack. The other names are to be looking, continue to look at the other gas names like IGL and GAIL.
Point taken. Kunal Vora also joins us on the show. So let's take the discussion forward. He's, of course, joining us from BNP Paribas. Kunal, what's your take as to the market setup right now and the early readings from the earnings season?
Yeah. So on the markets, we have turned positive on the market like for last few months, and market has actually played out well. Of late, there are certain worries which are coming back into the market. You got the rising bond yields in US, which have gone to, like, say, if I look at 30-year bond yields, almost going up to 4.8%. We've also seen some worries regarding the raw material price. Crude has again moved up. So, and market has rallied. So the comfort level has reduced over the last few months compared to what we were looking at in the month of March, April.
Right.
But the theme which we've been talking about, like, of late, is not really a short-term one. We are talking about a long-term theme called affluent India, and that's something which I can talk about. Like, we've seen the income tax data which came out in like recent months, and what we see is the affluent in India, which is the top 10% of the income earners, that's doing really well, and some of the stocks which we are recommending are coming from that theme.
Yeah, absolutely. And most data points seem to be suggesting that pretty much across the board. So let's first talk about discretionary consumption. Kunal, what is it that you're bullish on within that segment?
So what we've seen is, like, if I just go back to the income tax data, which I just mentioned about, the number of individuals earning more than $500,000, that's gone up by 5 times from FY12 to FY21. Similarly, if I look at number of individuals earning more than 10 lakhs or 20 lakhs, that number has gone up by almost 5 times over the last 9 years. And what we've been recommending is those companies which are exposed to this particular target market. So we've differentiated the market between the affluent basket and the mass market. And in affluent, like, there are various sectors which really fall into it. Within, like, say, within autos, it's about four-wheelers. There are certain cigarette companies. There are hotels, real estate. There are various sectors which are catering to the top 10-15% of households in the market, and that's what we are more bullish on compared to those which are catering to the mass market. And mass market will include likes of two-wheelers, FMCG, and rural plays.
Okay, so that's a take coming in. Now, since we're talking about urban consumption and urban discretionary spend, let's narrow down on the two-wheeler and four-wheeler space. Within autos, which are the stocks you like, Kunal?
So instead of getting stock specific, what we see is four-wheelers is something which is doing much better compared to two-wheelers. And we also have certain other concerns with two-wheelers, which includes the EV disruption. In four-wheelers, what we've seen is like last year, auto companies had almost 4 million sales in four-wheelers, which is all-time high. While in case of two-wheelers, it's still well below where it was like 3-4 years back. And we believe that this trend could actually continue. You could have the upper consumption, the affluent consumption, which is being driven by services sectors like IT, like global captives. That's something which we believe will be a structural theme. Though there is a short-term pressure which we are seeing right now, but we believe that in the longer term, that's a play which we want to be with. On the rural side or mass market consumption side, we believe that the pain is likely to continue. What you are seeing is rural wage growth, which is still in mid-single digits, MSPs, which haven't really been increasing beyond 5-6%. And CPI inflation was elevated in July, August. So these concerns will continue. And we believe that for companies which are catering to the rural segment, growing beyond the high single digits is going to be a challenge.
Point taken. Just looking at some of the stocks, and Kunal, want your take regarding Canfin Homes. Of course, the company comes out with its earnings today, and clearly the street is factoring in some good numbers. And let's also look at the charts of Bajaj Finance. Kunal, it's for you.
Yeah, okay. So for Canfin Homes, I think it's an interesting setup. The last 1 month, the stock has been trading or hovering above the 50-day moving average. That, I believe, could be a very interesting setup because the stock generally, after such a kind of sloppy or consolidative move, we expect the stock to get into a breakdown mode. But that's not happened for Canfin Homes, which means that the market participants expect the stock to gradually move up higher. So Can Fin Homes is something which looks attractive on the charts, would wait out for a breakout above 780, 785 mark, which is another couple of percentage points, but that could lead to a potential upside of almost 840 for Can Fin Homes over the near term. Bajaj Finance and Finserv, both of them are actually looking very attractive. So even after that steep uptrend for Bajaj Finance in the last, I think 2-3 months or so, from 7,000, 7,500 to now 8,000 plus levels. Even for Bajaj Finserv, the late pickup or the recent pickup for the stock, last 5%, 6% up move, 150 points up move for the stock. I think both of them are looking very attractive. So in fact, if there is any kind of a short-term correction or a dip for either of these two names, that should be taken as a good buying opportunity.
Okay, that's the take coming in on Can Fin Homes and some of the other active movers. Which, Kunal Vora, brings me to realty, right? Because that's where also the numbers have been suggesting that it's the affluent Indians which have been buying some premium properties. But having said that, Nifty Realty has already run up along with its constituents. You think there's still opportunity to bet on the housing demand play, maybe via ancillaries, if not via the developers?
So, realty clearly is one of the constituents in our affluent India basket. While in the near term, there could be some pressure because of the elevated interest rates, which we've seen. Having said that, I think it's an industry which seems well poised in the coming years. We continue to see the number of individuals in the high income bracket that continues to expand, and that should expand the target addressable market for this industry.
Okay, Nuresh, what about the charts of SBI Life and HDFC Life? Is it any sort of breakout or is it just a small one-day move?
So as of now, it's still a one-day move on SBI Life, but overall the stock has been getting resisted around the 1350, 1380 band for the last almost 1.5, 2 years. Every time it has come closer to this band, it has topped out and corrected. The only case where it becomes interesting is the fact that it made a top around 1380 back in September as well as in August, but did not correct a lot this time. So the correction was only down to 1270, so a much lower correction. Indicates relative positivity, but a breakout would be about 1380 levels. So overall, would wait out for some more price action, but bias would be positive. HDFC Life, similarly, a price point is 660 to 680, which is a major resistance. If that can cross, then maybe you look at it. For now, it's a one-day move on both these names, but would be watching out if there are follow-up action over the next few sessions.
Okay, so that was about some of the life insurance companies. In fact, HDFC Bank is one stock which has been supporting one end of the market. It's one of your top contributors to the gaining side. Let's listen into what the management had to say, because of course there has been a lot of doubt about what happens post-merger. Is there going to be pressure on growth? Because of course otherwise HDFC Bank was the stock that was giving you that consistent 20% kind of returns. Quickly on the charts of it, Kunal, if you can talk to us about HDFC Bank.
I think it's more of a flatline stock over the last 1 month. The stock has been just hovering around the 1500, 1550 range broadly. So I think 1525, 30 is a pivot point for this 30 point range for HDFC Bank plus minus that pivot support. But I think now what the stock needs in terms of either a breakout above that 1580 levels, which is the first major resistance for the stock price, or in case if the stock manages to break below the previous support, I think 1475, 1480 is the previous support for HDFC Bank. So till the time there is any kind of a breakout or breakdown above or below these levels, that's where I would believe that a trader should try and concentrate in terms of playing momentum. Yes, in terms of a longer term play, 1500, 1550 mark has been a major support since 2022-23 for HDFC Bank, and I think in that aspect, maybe it could be a good value buy at current levels, but purely from a trading play, I would like to stay away from the stock at current levels.
Okay, in the meantime, let's also listen in to what the management had to say.
See, that is the fine balance, right? We are here for growth, and the market provides enormous opportunity for growth, right? And it's one of the fastest growing economies in the world, and where the consumer credit penetration is in the low 20s. So there is a big runway for growth that we are tapping into. So yes, we are working towards growing, and at the same time in a profitable and a optimized margin, and for which ideally we will get to fund that through the deposit, and that is a journey, right? That is how we have done, and this merger has brought in borrowings, debt borrowings, as a one-time merger adjustment that has come in to us. And then over a period of time that we will work through this to see how to replace it. So it is a journey, and it is not one. There are several positives that come with the merger, and we try to work through to say how we build further from a customer relationship and broad-base that growth.
Trades right here on 80 now, and the closing trades definitely are dwindling. We're no more sticking by with that 19,800 mark, dipped a little bit from there. Haven't really seen any follow through come by from HDFC Bank after its numbers. Besides that 1% pop, it didn't quite hold on to the gains. Other heavyweights like Reliance have fallen absolutely flat right now. SBI as well is really not doing anything. And then of course there are pressure points from some amongst the auto names like an M&M, Tata Motors. IndusInd Bank, of course, is weak in trade today. So these are some of the culprits which are weighing heavy on the index. But Dalmia Bharat, that's the other stock which is in focus. They just had a con call. Ashesha is here with all the takeaways.
Well, yes, Dalmia Bharat is declining in trade today on the back of negative commentary that came in with respect to market share loss and also with respect to deteriorating debt profile of the company. Operationally, things look good. Volumes grew by about 7% on year-on-year basis, with volumes in core markets increasing by about 6%. Management also expects to outpace industry growth in the second half of the year. Power and fuel costs were lower in the quarter gone by, and the management expects costs to come down further in the second half of the year. But as I mentioned, management commentary with respect to market share loss was a negative this time around. They said that they lost market share in North Bihar and West Bengal region, although they've gained market share in the southern and northeastern markets. As far as the debt profile is concerned, gross debt rose in the quarter gone by. Net debt also rose by about 290 crores to 1500 crores as on the 30th of September. And the debt levels are expected to rise further with the completion of JPA deal. In fact, management also said that they expect net debt to EBITDA to increase to about 1 times from the current 0.6 times. As far as the JPA acquisition is concerned, it is taking longer than expected, but the management is quite optimistic. They expect the deal to be completed by the end of FY24. But the street has not taken the management commentary positively, especially with respect to rising debt levels and market share loss, and that is the reason the stock is declining in trade.
Okay, thanks Ashesha for that. Kunal and Kunal Vora, that is, we were discussing about the real estate stock, but would you like to play through the cement names as well, because they had gone off investors' radar, coming back again with the pricing power?
Yeah. The reason why we talked about real estate was more about from a affluent India consumption theme. And in that, what we are looking at is more of B2C businesses rather than B2B. I would say real estate really cuts the criteria instead of cement in that on that criteria.
Thanks so much for putting that into perspective, Kunal. But let's just see which are the other stocks which are buzzing around in the trading session. Some of the fertilizer names are still perking up. So RCF is inching higher. FACT has been holding up. Zensa Tech, pull up that stock. Actually, the earnings are expected today, and I think they'll be coming post markets. Its stock has suddenly seen a bit of a spike. So clearly the street is factoring in a lot after the numbers came in from Newgen Software as well, because that stock has reacted positively with a 6 to 7% gain. On the losing side, there are not many names. It's of course Glenmark Life, which is down 5%. PTS is down, and Dalmia Bharat, as we pointed out, is the other stock which is holding up in the red. But one stock which has been very volatile has been Delta Corp. Of course, after that entire GST surveys which were done and the tax notices of almost 25,000 crore which has come to the company now, that's been under pressure. Today, of course, the stock is in F&O ban, but it's holding up with a gain of around 1%. Listen into what the management had to say about this entire GST slap and those heavy duties that have been levied on the company.
We are very hopeful of the outcome, as I think the demands are pretty much arbitrary. I don't think they'll stand in the court of law. And we are hopeful that at the right time, this matter should definitely come in our favor. Going forward, whatever is the new tariff that has been introduced by the department, we are fully compliant from 1st of October this month. And as far as our offline business goes, we don't foresee, or in the last 15 days, we haven't really seen a drop in the footfall of people actually coming into our casino. So from a footfall perspective, the crowd is there. However, I must admit, the last 15 days, there has been slight decline in our revenues.
Okay, that's the take coming in from the Delta Corp management. Kunal, what are we seeing on Delta Corp today? Is it what Zomato was, around $40? Is there nothing to lose from these levels?
No,
Kunal Bothra, yeah.
Yeah. So I don't believe that it's a good time to try and buy the stock, because it's marred with so much of news flow and extreme amount of volatility. Even taking a for example, a hedge trade is not possible because of the way the stock gets into this the F&O ban. So I think that's also another hindrance for a short-term trader. So just buying expecting that the news flow would probably abate and the stock may get into recovery may not be a great strategy. It is always better to wait for that first sign of a reversal or a turnaround. That could probably happen even if the stock comes back to say 160, 165 levels. So looking at the last correction from 250 levels to now 130 odd for Delta Corp, it is better to wait out for the first 20-30 rupees on the upside and then look out for more consistency.
Naresh, what's happening to the stocks of Thermax and Ircon today?
We've seen a lot of other names in the capital goods pack do really well. Thermax was sideways for the longest period from September of last year till August of this year, broke out over the 2600, 2800 mark. So the trend is positive as such. So looking at it as a stock which could slowly and steadily continue, we'll see such moves on the stock because it's not the most liquid name as such. So we see such 5-7%, 10% moves in a little bit of a fade off, but the structure remains positive. Ircon, on the other hand, is another stock in the railway pack which has gone up spikily. So would be a little careful here. Could again pause out, but Thermax would be interesting on dips.
Okay, so that was about a couple of these buzzers in the trading session. Of course, tomorrow a whole host of earnings are expected. LTIM, you have Wipro, Persistent Systems. Today, of course, Tata Elxsi will be coming out with earnings, as well as Zensar Tech as well, and L&T Tech. So a whole host of earnings coming in. Kunal Vora, that is from the IT pack. What has been your reading? The commentary coming in from TCS, even Infosys and the management of HCL Tech wasn't very enthusing.
Yeah, IT services results have been slightly weaker compared to what we have expected. Having said that, we remain positive on the space. IT along with financial services are the top overweights in our sector preferences. We believe that it's a temporary blip and the structural story in case of IT services continues. The deal wins remain very robust and we believe that it's a matter of time. It can take a couple of quarters, but it's a sector which still trades at a very reasonable valuation in a fairly expensive Indian market.
Do you prefer large caps versus mid caps, or it's the other way around, Kunal?
Our preference remains for the large caps.
Okay, so that's a take coming in. As far as the IT sector is concerned, prefer the large caps. There might be pain for a couple of quarters, but post that, perhaps we'll be back on the road to recovery, given the deal wins have been strong. Kunal Bothra, that is, within IT, which are the names that you like?
So I'll still concentrate on the mid-cap names in terms of momentum. I think Birlasoft is something which looks attractive. That's a stock which has been more consistent in terms of the price trends. The larger cap names, for example, the likes of HCL Tech is something which also looks quite attractive, and the stock has been holding up quite well. There has been a steady build-up of open interest for the stock. Unlike many of the other larger cap IT names, so there has been actually unwinding in terms of open interest, specifically TCS and Infosys pre-result. So that's a positive pattern for the stock price. And then many of the other mid-cap IT names, the likes of FSL, for example, that's also looking quite attractive.
Kunal Vora, thanks for taking the time out and joining us today on the show. We'll let you go on that note, but let's also hear it out from Aman Chauhan from Abacus Investment. And what are the sectors that he's betting on in this market?
We have the same view. That's the reason we have not sold or reduced our IT exposure. We are holding on to what we have. So next 2-3 quarters are not going to be great, but the way people look at IT is sequential growth. So fine. Then we're heading for the December quarter, which is a seasonally, because of holidays, a weak quarter. Post which the sequential rates can pick up and then the stocks can continue to perform. So that's broadly what my view also is on it. We are constantly staying away out of this. We know for sure that that's where the momentum right now is, but happy with what we own. So we own some of the large PSU banks. Beyond that, not much on the defense side. We have some one or two private companies on the defense side, but none of the defense PSUs. In hindsight, it was a tactical trade, but since we don't do more of tactical investment, we invest the 3 to 4 year horizon. For now, very little of the mid-sized PSU exposure, both on the banking and the non-banking side, where right now the momentum is. So at least on the portfolio front, I can say not much of exposure into these names.
Welcome back. Well, the index is holding up okay, 19,800. So it's off the lowest point of the trading session, but off the highest point as well. So we are somewhere midway as far as that range is concerned. A lot of cues lined up. Of course, we have been dealing with a lot of earnings and the geopolitical issues, and that remain top of agenda. But other than that, there's CPI data which is expected in UK and Eurozone. So we'll watch out for that. China GDP, that's going to be fairly important tomorrow because China is doing a lot in terms of protecting and supporting its economy. Is that showing up in the GDP and industrial production data will be important to track, and of course the read-through will come in for the metal names as well. Crude oil inventory is something that US will update for itself. In terms of the global earnings, you have ABB, Netflix as well as Tesla which will come out with earnings, so watch out for that. Back home it will be Wipro, LTI Mindtree, Bajaj Auto, IndusInd Bank. These are the names from the Nifty Pact which will be reporting numbers, and of course from the broader markets, ICICI Lombard, Persistent System, Polycab, Z Entertainment, Bandhan Bank. So a lot of these names will be in focus. Tomorrow is the last day to be eligible for TCS in case you want to get that dividend. So watch out for that. And the lock-in period opens for Traction Technologies after its IPO. So that stock as well as RR Kabel is going to be in focus. IRM Energy, that's a fresh IPO that's going to open for subscription tomorrow. And of course, the big headline that all of us are tracking globally is the fact that US President Joe Biden is likely to visit Israel. That too will be very important to track in terms of the headlines coming in and what happens to the war, whether it gets abated or it continues is something we'll have to watch out for. So Aisha, of course, a lot of events to watch out for, but earnings and this visit of the US President will be something critical to track.
Oh yeah, absolutely. Extremely critical considering Anthony Blinken is already there. But since we're on the subject of earnings, let's address all of those. Many to track. And Anisha, you go first. Wipro, LTI, Mindtree, what do we expect?
Well, LTI Mindtree last time was a bit weak, so this time we are expecting maybe growth to pick up a bit, not a runaway number, but at least 1.4% kind of growth in terms of constant currency. The rupee revenue is also expected to jump by almost 2%. Margin is something which might see quite a bit of sharp slip this time, so don't get worried about that. It's the wage hike impact probably which is going to come in through, so we are watching out for the number from LTI Mindtree. 15.5% is what we are expecting. Profitability is expected to slip by around 3%, so that the number comes in close to 1120 crores. Growth will largely be driven by manufacturing. Even high-tech is expected to continue decent growth. BFSI has been a bit weakish for them, and that might continue this quarter as well. And the deal TCV is expected to be a bit softer than it was in Q1. So watch out for that number as well. Overall, the management had alluded to the fact that in FY24 double-digit growth is unlikely. Is there any change in commentary? Is there any pickup? At least what they are witnessing will be important to track, but that's for LTI Mindtree. Let me quickly run you through what we're expecting from Wipro as well, because we're used to seeing very dismal performance from the company. Remember last time there was a sharp slide in numbers as well as that sharp cut in headcount. What happens this time will also be critical. The IT services revenue is expected to see a cut of almost 1%. Constant currency is also expected to slip by 1%. Remember the guidance for Q2 was as it is, a cut of almost 2% to a growth of 1%, and is expected to come towards the lower end of that guidance. Margins might just hold up at that 16.2% mark because the company has delayed its wage hike into Q3. So on account of that, you will not see that pressure. Profitability is expected around 2,800 odd crores. The order intake is expected to moderate a bit. Last couple of quarters, actually, deal wins have been rather strong for Wipro, almost $4 billion thereabouts. That will slip to around $3.5 billion is what we're expecting. For Wipro, the thing to track is also the guidance going forward. So they'll come up with Q3 guidance, but the street is very, the range of what they're expecting is very wide. You have it on the screen. For instance, Morgan Stanley is expecting minus 1.5% to plus 0.5%. JM Financial is talking about the range of 0 to 2 and Aquarius is talking from -1 to +1. Let's see which of them is correct, but for now the range is quite wide, Asha.
Oh yeah, absolutely it is. But you know what? The list doesn't end there. You've got IndusInd Bank as well coming out with its numbers. And Harsh, given the pressure on the stock today, what is the street expecting?
Right, IndusInd Bank expected to deliver numbers. Let's first take a look at how loan growth has really shaped up. 5% sequentially, 21% year over year. Solid loan growth clocked by IndusInd Bank. But even more significant is on the deposit side of things. 4% growth on a sequential basis delivered by IndusInd in its operational update. 14% year over year. So whether that deposit growth can hold up is the real question, and that is probably something that will come out of the management commentary. Let's look at the broader P&L. How will it shape up? It's expected to be a good quarter for IndusInd overall. 16% growth on the NII front with NIMs absolutely flat. So you're expecting NII to be around that 5,000 crore mark, maybe slightly higher than 5,000, but roughly 5,000 crore. Let's also look at operating profit expected around the 4,000 crore mark from IndusInd Bank in this quarter. We're also expecting around 1,000 crore odd of provisions to come through. Provisions expected flat sequentially, around 990 crore was the number same time last quarter. So you're expecting provisioning to remain, sanguine, good benign credit cost environment, and therefore credit costs also expected to remain well in control. Profit after tax expected at around the 2,250 crore mark post that provisioning and taxes. So you're expecting profit after tax growth of around 20+%. So healthy on all of those counts. IndusInd Bank, the NIMs will be, of course, in focus. This is a quarter where margins will be in focus. ROA is also expected to see some amount of uptick when I'm looking at it year over year. So expecting a good quarter overall from IndusInd.
And then there's Bajaj Auto. Shrishti, what can we expect from that?
Well, yes, talking about Bajaj Auto, this time around we are expecting a decent set by the company, because do note that this time all the festive period is coming later this particular year. So better to compare the numbers on a sequential basis rather on a YY basis, because sequentially we are expecting a jump across all the parameters. In a single digit growth is what we are expecting onto the top line as well as bottom line, and the key to watch will be the margins. This time we are expecting a 19.4% EBITDA margin by the company, and that will be supported by three factors. Firstly is the price hike that the company has taken. Other than that, the kind of product mix, and thirdly, the cool off in the RM cost. All these three factors will support the margins of the company is what we are expecting. About the volumes, not much of a support coming in on a sequential basis. There was just a jump of 3% sequentially, but when we talk about the domestic volumes, they were absolutely flat quarter on quarter, but exports have seen a bump up of 8% on a quarter on quarter basis. So these will factor into the numbers for sure, but key to watch will be the management commentary onto the festive demand, the kind of bookings that they are getting for two of their new offerings with Bajaj Prime Tyre, as well as the rebound in the export market. So all these will be a key to watch out for, but definitely an eye out on the margin figure of Bajaj Auto. Back to you.
Okay, thanks so much, Shrishti, for telling us about Bajaj Auto. For now, the stock is holding up okay. Pashupati Advani also joins us on the show. Pashupati, let's start by discussing Bajaj Auto itself. What do you think will happen to the prospects of this stock? Because of late, we have seen quite a bit of momentum build up and positive brokerage action on Hero MotoCorp and TVS, not as much for Bajaj.
Well, obviously, maybe they're going to introduce some new models which will surprise, and maybe they'll bring some excitement in the market. But everybody, there seems to be generally robustness in the two-wheeler market, and people are coming back. And as you said, the festive season. So after Navratri, I think people will start booking, and we'll see the numbers definitely kick in before Diwali. So, we're seeing, obviously better numbers from last quarter, and I think we'll continue to see good numbers in the whole sector. That's my thought on the two-wheelers.
Two-wheelers, that's the take coming in right now. IndusInd Bank, let's check in on what that stock has been done, because we're expecting top line to rise. Margins are expected to be largely flat. That is what the broader expectation is from IndusInd Bank. Let's also revisit HDFC Bank, because that's also been reacting to its earnings, which came by yesterday. 0.7% gain is what you're seeing on HDFC Bank. While it hasn't fallen after its mixed earnings set, but it's not risen with conviction either. But here's an ET Now exclusive, and price of ethanol will be revised before Diwali itself with retrospective effect. In fact, ET Now is learning from our sources that upward price revision of ethanol will soon be cleared by the cabinet. Sameer Dikshit is here with more details.
The big news and development that we are picking up from our sources is related to the ethanol. Sources have informed that soon there will be a revision regarding the ethanol prices, and a revised price will be soon cleared by the cabinet. The source has informed that the Petroleum Ministry has sent a cabinet note to the central government for the revision of ethanol prices, and the cabinet is likely to clear the proposal before Deepavali, the festival. So this will come into effect from 1st of October. So we have seen that last year also government revised the ethanol prices, and this year the revision will be for all the ethanol, whether it be from C and B heavy molasses or even from the sugar cane. So all type of ethanol prices will be revised, and it is likely to come into effect from 1st of October. The larger picture indicates that government has set an ambitious target to procure more than 580 crore liters of ethanol for this year, whereas if we go by the projected sale of petrol, then the ethanol procurement could be beyond 680 crore liters. So since the procurement target is big and government wants to help and give a sort of a helping hand to all the stakeholders, so it is very likely that a price revision of ethanol will soon take place. But government is also looking for an ambitious target of 20% ethanol blending by year 2025-26. And Niti Aayog report has already suggested that if the government wants to achieve this target, then the ethanol procurement for the year 2024-25 could be somewhere around 988 crore liters, whereas for year 2025-26 it will be beyond 1,000 crore litre. So for this, the government wants to give a helping hand to all the stakeholders, and for this year, the price revision of ethanol is likely to take place very soon, and the revised price is likely to come into effect from 1st of October.
Okay, thanks so much for putting that into perspective, Sameer. But let's also ask Naresh on the charts of some of these sugar companies as well as Praj Industries. What really stands out?
So the trend has been positive for the smaller sugar names compared to the larger ones. We've not seen a breakout in a major way for Balrampur Chini, which is the largest name. But if you look at something like Awadh Sugar or a Magad Sugar, Dalmia Bharat Sugar, they've all been trending well. So overall, sector looks positive. But Praj is the one which has been the consistent mover over the last 6 months. The stock has been making higher tops and higher bottoms. 560 could be a trailing stop loss for the stock now, and the trend could continue higher.
Okay. That's the take coming in some of those sugar plays. Right now, of course, it's really all Canfin Homes. That's the one which is really on a tear. HP BP as well have made a very strong move today. About a 2.5% is the kind of uptick that you're seeing on both these names. Naresh, let's see the charts of these OMCs as well, although very volatile, supremely sensitive to the way crude moves. But today, of course, it's a decent move.
Like a one-day move. We are very stuck in a range for these names. So they've not corrected sharply even when the crude prices went up. So that tells you there is support on the lower end. So if you look at a stock price chart for Hindustan Petroleum or a Bharat Petroleum, they've been pretty sideways. So BPCL has been around this 350 to 370 mark for the last 1 month in terms of volatility of the crude prices, but the stock remains in this range. So for now, not a buy, not a sell, stuck in the range. Once it crosses 370, maybe could take a relook on BPCL.
So that's the take on BPCL. In the meantime, pull up the stock of L&T Finance Holdings. That one is up almost 3 to 4%. Nuvama has actually initiated coverage on the same. They have a buy rating with a target price of 160. They say that the company is aiming to become a full-fledged retail NBFC by FY25. The retail share is likely to move up from 88% to all the way to 100% in a couple of years. And the new CEO designate is also gearing up to beef up the risk assessment as well as pull in the technological levers which are available for the company. So on account of that, that stock is higher by 3%. Kunal, quickly on the charts of L&T Finance.
Yeah, looks very attractive. On the short-term charts, the stock confirming a breakout above the previous highs. I think in the month of June, July or July end specifically, the stock had made a high of 140. Post that 3 months of consolidation, and the stock was stuck into a 20-point band. I think 140 on the upside, 120-ish on the downside for the stock in terms of support. So after today's move, the stock comes very close towards breakout of this 140 mark, which could probably trigger the next 20 points on the upside for the stock. So I would look out for targets in the range of 150 to 160 for Nifty Finance over the very near term.
Okay, let's also get in a buzz across dealing rooms. What are the stocks that are being talked about? Sharad is here with all that data. Sharad?
Well, yes, in focus we are having Home First Finance, and what we are hearing from the dealers as well as traders is there's buying seeing in certain counters, especially in the DI segment. Domestic institutions have been bullish, and over the last 2 trading sessions, buying has increased. Now, if you look at the volumes also, that is up almost 7 times its 20-day average. And importantly, the key DI is already invested in the company. They include the likes of Invesco Mutual Fund as well as ABSL Mutual Fund. Now, we did see a rally coming in from the realty names as well. And now that buzz has actually having a rub-off effect in the housing finance companies also in the day's trade. We are seeing most of them buzzing in the trade as well. Now, looking at the company itself, the brokerages are bullish on it, and they have stated that the potential revival of the interest subsidy scheme coming in would actually benefit the low to medium ticket size holders for the housing segment. And importantly, brokerages are also bullish as housing finance companies are expected to gain post the merger of actually HDFC coming into it, and because of that there would be more action in the primary debt markets, which will aid the housing finance companies. Now, we did look at the Bloomberg analysts actually tracking. As per Bloomberg, roughly 20 out of 21 analysts still have a buy rating. That means 95% of analysts still are holding a buy rating. So that's an important update coming in for Home First Finance, where DI buying is being reported.
Okay, thanks so much for joining us, Sharad, with that take. Home First, of course, is perking up, and you'd also talked to us about Vijay Diagnostic last week. That stock too right now is holding up with a gain of almost 3 to 4%. But which are the stocks which are on the radar of Sanjeev Bhasin? Listen in to his take on HDFC Bank.
If you see on a sequential basis, they are amalgamating such large balance sheets. You know, they are a market cap now in excess of 15 lakh crore. So obviously it will take a few quarters of transition. But look at the CASA growth, the growth on credit and the deposit base. I think that is telling you that they are the biggest opportunist in the whole country, and growth is very, very much on the anvil. So if you are a slightly longer term view player, then you have to invest in HDFC Bank. It is not because of the valuation or the comfort which you get and the underperformance. There is underperformance for a limited period. I mean, who thought all the PSUs will be re-rated and double and triple? So I'm not talking of a double triple, but I think it is a portfolio pick here, and definitely you should stick to it as a SIP, because these prices may not remain forever. And if we have to go higher, HDFC Bank has to participate. So I think it is very, very reasonably in line with what the management had guided. And definitely as a disclosure, for some of our high net worth individuals, we are doing a SIP in HDFC Bank. In the last 1 year, Apollo, CEAT, MRF, they more than doubled on the back that SPT rubber prices have softened. China's imports have almost vanished. And locally, if cars are at a 1 year waiting, then the ancillaries have to do well. So you name it, from a Bosch to a Motherson Sumi to a CEAT, which I think the margins are actually superb, but it's also in the price. You know, the stocks are not cheap and they've doubled or tripled. But it's telling you that OEMs are in a very sweet spot. And as long as this Chinese embargo remains, I think we are, most of these companies will do extremely well. Fundamentally, autos are in a very sweet spot. So Maruti, Ashok Leyland, Tata Motor, Hero Moto, Bajaj Auto, these all seem to be in a very sweet spot, and you should be looking for declines. On the OEM, our top pick continues to be Bosch. We are very, very bullish on the likes of Exide, where the two, it's a duopoly, Exide and Amar Raja, they are gaining more and more traction. And with lead and nickel prices falling, their net margins can be very, very strong. Jio has just been initiated. It is going to be an outperformer. And you know, the mutual fund distribution, the whole gamut of cross-selling is picking up well, and it's got the brand behind it. The stock is an expensive stock, but if you have a 2-year vision, you must add HDFC Bank and Jio purely on the back of pedigree managements and the way forward. India is on the cusp of savings being capitalized onto stock market and other instruments, and that financialization is going to be widespread, and the bigger players are definitely going to get a larger share of the cake. But make no mistake, the NBFCs are being an outperformer, and I think that their cost of funds and their diligence compliances are much less than what banks have to do. So Jio is in a sweet spot, only it needs more gestation.
Right, and the tire names surely have been in a sweet spot. In fact, we chatted with the CEAT management as well. We'll play a soundbite in just a second. But Kunal, decent move across the sector, right? I mean, be it in Apollo Tyres, MRF, CEAT, of course. Any trading opportunity?
Yeah, in fact, Aisha, there was a time when Apollo Tyres was one of the favorites in the tire pack. Balkrishna Industries used to struggle. I think that was maybe around 6 months or 9 months back for the stock. Balkrishna was around 2000 levels or sub 2000 levels, and Apollo Tyres was north of 400, 420 plus mark. But the mood has now become completely contrarian. You've seen Apollo Tyres still now trading below the 400 levels, and Balkrishna Industries actually looking quite strong about 2600 mark. That's a stock which I would be interested in terms of the tire names. From the non-F&O stocks in the tire pack, JK Tyres is something which also is extremely attractive. Phenomenal charts for the stock over the long-term basis. The way the stock had moved up from 100, 150 mark, I think 2020-21 to now 300 plus levels, looks quite strong as a more positional play.
Okay, and since we're on the subject of tires, here's CEAT, which is also zooming in trade today. Solid show in the second quarter numbers, aided by margin expansion and a beat on all counts. Here are what the management had to say about the sustainability of margins at a time when their raw material costs have definitely moved up.
A very good quarter for us, especially at the gross margin level. As I had been talking about margins, we want to maintain our margins in a narrow band going forward. So our objective is to have predictability of margins, stability of margins, and gradual improvement. So I think if there's no great volatility in the system, we would try to maintain margin in a very narrow band. Crude has gone up, and imported rubber prices have also inched up. But at the same time, demand for tires are weak in China, in Europe. So these two things will balance each other out. Our raw material basket seems to have bottomed out, and there'll be a gradual creeping inflation going forward in quarter 3 and quarter 4.
Let's take the BTS ideas from our chartists as well. Naresh, what's on your buy today, sell tomorrow list?
First is a buy on IGL. The stock has followed up from yesterday's breakout, showing strength today as well. Stop loss at 482, target price of 500. Second is a buy on Power Grid, a new all-time high today, breakout, seeing follow-up today as well, should see some more. Stop loss at 205, target price of 212.
Power Grid already seen quite a bit of spike today, 2% higher in an otherwise weak market. What about you, Kunal?
So I'll go with L&T Finance as the first stock which rests a buy, targets of 150. Stop loss 134, and ACC, something which I flagged off in the morning in terms of the opening trade, looks very attractive as a setup. The stock has come back towards a flag pattern breakout above the 50-day moving average, targets of 2080, stop loss at 2018.
Okay, so those were some of the stocks that our chartists like at this point of time. Just 5 minutes left for the closing session, for the closing trade actually to kind of get in clocked in. For now, we are staring at 19,800 at the index. Our Sensex 2 has been holding up comfortably today with a gain of almost 300 points on the Sensex, 66,460. Bank Nifty was a bit of an underperformer because of IndusInd Bank and some of the other banks which were under pressure. But if you look at the key sectoral trend today, actually it's fairly broad based, to be honest. You have Can Fin Homes, which is higher by 4% ahead of its earnings. Delta Corp, which has managed to inch higher after the management commentary. L&T Finance Holdings, on account of that Nuvama note, is also inching higher. And then the entire energy pack, whether it was an HPCL, BPCL, Chennai Petro, all of these stocks were fairly excited, apart from Apollo Tyres, and the entire pack coming in on the tire space. Separately, on the losing side, we have Dalmia Bharat, a 3% cut. Havells is down on the trading session, as well as Tata Motors. Kunal, actually Havells and Tata Motors, both of these stocks were quite positive on. With this slip that we are seeing today, will you change your view, or will you continue to continue your long positions on both the names?
In fact, Tata Motors is something which I would still look to accumulate at current levels. I think the stock has come back towards a mild retracement. So from 668.72 mark, Yesterday, the stock has come back to its 655 odd mark, which means a drop of another 15 rupees approximately for the stock. That could actually be a good level to try and chip into the stock price. Havells, on the other hand, again has come back towards just slightly away from a major support of 50-day moving average. That's closer to 1365. So in case if the stock drops by another 20 points, that could probably be a good point to try and go for a contra buy in Havells as well.
Okay, those are some strategies coming your way as we begin winding up for the day. Kunal, anything to worry considering we didn't latch on to 19,800, or you think we're in good stead consolidating?
I think we're in good stead because even after in the last half an hour or so, there have been other large cap names like Reliance has come back to the day's high. Kotak Bank is looking quite charged up. You've seen ACC, etc. also perking up in terms of the price action. So I think there are many other large cap stocks which the markets are trying to now sort of expect that maybe these could be leaders for hopefully the next phase of the rally, and the index coming back about the 90,800 mark on the spot levels. I think that could probably be a decisive factor. We discussed in the morning that how many of the global market charts, specifically Dow Jones, looks quite charged up, specifically above the 200-day moving average. Even that should aid more of the equity market rally across the globe.
Okay, that's the take coming in pretty